right, guys, welcome back. So we're going to talk about the statement of cash flows. Statement of cash flows. The statement of cash flow says cash is king, cash is queen. Help me understand what happened to my cash during the period so I can make sense of it. I don't just want accruals, accrued expenses and accrued revenue on the income statement. I want to know what happened to my cash. And so what you're going to do is you're going to start with beginning cash balance. Let's say you started at the beginning of the period with a cash balance of $1,000 as an example. And then you are going to say, what is my ending cash balance? And let's say your ending cash balance is $5,500. So the difference is $4,500 increase. And the question that this statement is asking is why? Why did my cash balance increase by $4,500? And we are going to explain it using O, 2, I, and 3F. OIF. O stands for operating activities or operating cash flows, if you like. This is cash flows from buying and selling goods and services that the company does. Operating cash flows. Does that make sense? That is operating activities. We can get the operating cash flows using the direct or the indirect method. Direct method or indirect method. You don't have to use both. This is required. You are required to use this. Okay, the indirect method is just a reconciliation. We will learn about it when we get into the chapter on cash flow statements. Or the direct method. Okay, this makes more sense, more intuitive sense than this. But we are required to use this. We will know how to do that. Okay? But for simplicity, let's say that our cash flow from operation, we are trying to explain $4,500. Now our cash flows from operations was $2,000. Let's say we did the direct method or the indirect method, we came up with $2,000. Okay, now what is our investing activities? Investing activities. Our investing activities is money that we spent to purchase buildings, computers, laptops, bonds, stocks, any investments that you made. That's what we're going to call investing activities. Does that make sense? Investment in buildings, in computers, in furniture, in fixed assets, in stocks, in bonds. Those are investments. If you sold it, the cash comes in. If you purchased it, the cash went out. So the net of all of that is going to be called investing activities. And let's say that investing activities is 2,000 also, positive number. And then the F is financing activities. This is money that is contributed by the owners of the company. Money that the owners put in the company or that they took away from the company. We call that financing. Borrowing, like debt or equity financing. All that stuff go here. Financing. So let's say that our net financing cash flow is 500. Or let me just make it a little more fun. Let's say it's 499. Man, you almost explained 4,500. But we have $1. The $1, it is very unimportant, but I want to mention it to you. It is what we call effect of exchange rate. Exchange rate on cash. If I have some euros in my room right now, let's say €1 is worth $1 today. But tomorrow, I go to the bank and the same €1, they say we'll give you $2. So how do I explain the increase in that $1 becoming $2? We're going to call that effect of exchange rate on cash balances. Okay, so I got an additional $1 because I hold foreign currency, and that explains the 4,500 change in cash. So, ladies and gentlemen, that will be my expose to the statement of cash flows. I hope you understood it.